the argument that this situation that we are faced with now is somewhat similar to the situation we faced in the post-bubble burst period. It is stifling innovation. And innovation were the cornerstone of enhanced productivity and wealth that has been created in this country. That's a very, very serious problem. The argument is that this will create a situation where bright, young entrepreneurs will simply say, I'm not doing it, it's not worth it. I'm working very hard, and I'm going to wait for the market to turn, and then I'll do it. So that is the big issue. The flip side of that is that if we look back in history, some of the greatest companies were created in the worst period for the industry. For example, Google. Google was created after the burst of the bubble. So that is something that is very, very worrisome for policymakers. The situation in this marketplace right now is of great concern because innovation is the heart of what drives productivity enhancement. Innovation is what drives enhancement in quality of life in every sector of our economy. The other issue that we are faced with is that there are fewer dollars that are coming into various rounds of financing. This is, again, causing many companies that are further along to pause and to ask, how are we going to get to cash flow break even? If the company had planned originally to have multiple rounds of financing and suddenly that money is no longer available, creates a big, big problem for companies throughout many sectors in this industry, particularly the life sciences, it becoming, which usually consumes a fair amount of capital before there is a liquidity event. The issue that we are dealing with is that existing companies that need to raise more capital are struggling. Many are unable to do that and will have to be shut down. Companies are also reducing the pace of their development and adjusting to the situation. Last November, Sequoia Capital summoned 140 of its CEOs to a room and read them the Riot Act, basically telling them, whatever cash you have, make sure that lasts at least for 12 to 18 months, because you can't bank on raising additional capital. So that means resizing of the operation. That means downsizing in terms of the headcount. That means slowing down the development of the company in the best of circumstances. In the worst of circumstances, these companies will have to be shut down.